Good afternoon, everyone. We are very pleased to have you here join us in our panel discussion. We have a great panel lineup for you. Now we are going to discuss about the funding scene in Asia, especially in Southeast Asia. The topic up for discussion is where's the new cash for a startup founder? Now, you're in for a great time because we have a good representation here. Our panelists, they come from different backgrounds, and these are very seasoned investors and fund managers. First, we have Mr. Jeff Chi from Vickers Ventures, founder and chairman of Vickers Ventures. Now, Jeff has been in the startup scene maybe a generation ago, in the first .com, in 2000 onwards. In fact, we were both in the .com environment back then. We kind of overlapped, you know, we had some work together, but otherwise he was in the VC scene and I was in the startup. But that's meaningful because Jeff understands the difference between what took place then and what takes place now, and some of the key learnings there that he can share with us. Also, very importantly, is that Jeff heads Vickers Ventures activities in China, and that's where he's calling in right now. Jeff is currently in Shanghai, and it would be interesting to hear from him on what's going on in China and some of the key things going on there, and also what Vickers Ventures is doing outside of China. As we understand it, that Vickers Ventures is also very active in Southeast Asia. So it'd be great to understand from the point of view of a startup who's in Southeast Asia, what we can expect in terms of the things that Vickers Ventures is looking at. Now, our second panelist is Ms. Pinn Lawjindakul. I'm sorry about that. Pinn Lawjindakul. Let's just call her Pinn. I think that's a lot better, a lot safer for us. Pinn is based in Bangkok, as I understand it.
Singapore.
Oh, based in Singapore. I'm sorry. And but she has done quite a bit of work previously in India. Another big market. No? So we have Jeff in China and we have India. Now, Pinn was very instrumental in some of the things that had taken place in India several years back at the early stages. She was part of the team which looked at Flipkart. Am I right, Pinn?
Yeah.
Right. And also, if I'm not mistaken, you were integral also in the things that were taking place with Ola. Those are like unicorns or decacorns probably out of India, right?
Yeah.
So maybe some of your experiences there, and now you're looking at Southeast Asia, that will be very meaningful, right? And finally, we have Kenneth Lee, a managing partner of MDI Ventures, another huge market. MDI Ventures is the corporate venture arm of Telkomsel, am I right?
Telkom Indonesia.
Telkom Indonesia, right. And of course, being in Indonesia, the bulk of Southeast Asia unicorns come out of there. So it would be great to hear from Kenneth on his insights of some of the things that took place in Indonesia back then when some of these unicorns or decacorns were just starting out. And especially now, what else is there to expect in Indonesia and also outside of Indonesia? Because as I understand it, MDI Ventures has a strong presence in the other markets in the region too, including in Singapore. So are we ready, dear panelists?
Yeah.
All right, great. Now let's start with the topic at hand. Where's the new cash for startup founders? But let's lay the foundation first. It seems that a lot of things have been taking place the last several months. Of course, top of mind would be the things that were affected by the pandemic, COVID-19. So we might have a discussion around that. It would be meaningful to understand the different points of view about where the markets are headed, you know, each one of the markets in Southeast Asia, knowing that it's such a huge market. But otherwise, based on your various experiences, your respective experiences in India, China, Indonesia, and also Southeast Asia as a whole, what's your sense for the current landscape for funding? Maybe as a word of not so much advice, but for the founder to understand what's going on in the fund manager landscape. What are they looking at? What's going on? Would anyone like to start?
Sure, I could talk to a little bit about how we're looking at the market and what we're seeing. I was on a panel about a month ago talking about this topic as well, and one of the panelists mentioned, you know, a lot has changed in COVID, and people are talking about the new normal. Things will be different coming out of COVID. But this particular panelist mentioned it's also important to think, when you think about what the new normal is, actually what has not changed, right? So there are things that will remain the same. There are things that will be different. Obviously, there are industries that have been hurt very badly because of COVID, and industries such as online education, such as teleconferencing, telemedicine, that will benefit very well in a post-COVID era. So I think the first point is really just to understand how the landscape has changed and what is a normal, or what do people think the new normal will be. And that is indeed a challenge that VCs such as ourselves have in trying to figure out how to think about what businesses will do well in the post-COVID era versus what business will find it challenging. I think when you put that into context, one of the things that we see is that COVID, in a way, hasn't really changed too much of things. A lot of the initiatives and the companies that we see doing well was COVID was a catalyst. In other sense, that we start seeing that technology is an enabler in many different industries, and because of COVID, that has actually accelerated. So if you think about online education, for instance, the main bulk of education, which is the public education system, has shied away from because they felt that face-to-face was better. They felt that online is a fad. It can't be as good as face-to-face instruction. But because of COVID, they have been forced to adapt and to try. And many, especially if you think about the public schools here in China, as schools internationally are thinking about a hybrid model where students have the ability to go online, it's not that bad. And so all of a sudden we see online education going mainstream. So that's kind of what I mean by COVID being a catalyst, because these were long-term trends that just accelerated because of COVID. Let me stop there and let the other panelists fill in a little bit. I can fill in some nuggets afterwards.
Sure. Thanks very much, Jeff, because you brought up a great point. Some of these technologies were supposed to have come up at some point anyway, but COVID provided the impetus for it to really surface right up to the point where it becomes a necessity. Now, the other panelists, Kenneth and Pinn, do you have anything else to add? Maybe on a geographical point of view, are things more are happening as a result of COVID elsewhere, or maybe the emphasis is in other markets outside of China or India now, because maybe it's just getting too crowded in some of these markets?
Interesting. Yeah, happy to add my perspective to Jeff's. I think I'd say two things. One, definitely there was, at least over the course of this year, a bit of a knee-jerk reaction to just stop and see. And I think that was the stance for a lot of VCs and even entrepreneurs, really, right? If they're not in need of cash, there's been probably 6 months of like, let's stop and see what's going on. And then we are definitely seeing towards the tail end of this year, activity starting to pick up. Founders starting to open up more discussion, and VCs are also starting to be more, active, right? So, and for this region, I mean, venture as an asset class, I think, remain quite resilient to short-term macro changes. I think we are a optimistic, venture class, asset class as a whole, right? Just to put that in perspective, I think activity in China has been, at an all-time high, I would say, given what Jeff has said, right? Like, there are a lot of opportunity and market tailwinds that COVID itself brings. Similar in India, I think Southeast Asia, perhaps it's probably the more risk-averse of all markets. So we're seeing it's slow. It's relatively slower, but I would say it's definitely not. It's definitely on the right trend, upward trend. So yeah.
Right. Now, before we move on to Kenneth, I'd just like to place a bookmark in our discussions here. a kind of place marker. You mentioned about Southeast Asia being more risk averse and things are moving slower. Maybe there's something that we would like to dive deeper into. But before we do that, let's hear from Kenneth in terms of what your points of view are about the landscape here.
Yeah, I mean, for us, we're pretty much very active mostly in Southeast Asia, especially Indonesia, right? But I think I agree that COVID is a catalyst. And to be honest, this year it's actually not slowing down that much in Indonesia. I don't know about the rest of the Southeast Asia countries, but at least in Indonesia and Singapore, I think we have done quite a number of deals. Actually, we have done more deals this year compared to like the whole of last year. So I think we see that because of this catalyst, the need for digital transformation, what we call it, is imminent, right? And we actually, for us at MDI, we work closely with the government. So I think the government now actually realized that, for this digital transformation to happen, we have to do it now. And we see actually some of the programs that we have accelerated by as much as 3 to 5 years. Certain sectors like edutech, healthcare, we actually see a lot of boosts. And another sector that I see in Indonesia that got a lot of boosts is actually in logistics. Because I think, for e-commerce to actually grow, in Indonesia, e-commerce is still in the single digit in terms of market share compared to like total retail. But I think during COVID, it increases a lot. But there's still certain limitations that we need to cover, such as like payment and logistics. So I think these industries, these sectors got a real boost because of COVID. So yeah, I think for Indonesia, at least I see it's still going strong, although a bit slower in certain other sectors. But for startups, I think, if they want to start a company, I think they should start it now.
Right, great. 2 points that I would like to place a bookmark on. One is that you have been more aggressive during these times than normal. We would be great to understand why. Could it possibly be linked to maybe you can get better valuation now because the founders might be more realistic in terms of the expectations? That's one. And what's the other point? The other point is about, what was it? Oh yeah, about pivoting. Now, you mentioned the same points like as Jeff did about how because of the pandemic, the focus has shifted to things which are done online, education, medtech, and also with logistics. But what about the other founders of startups which started about a year ago, or a year and a half, or 2 years ago, which were not in these areas but have been affected tremendously by the pandemic? Is it something that they should do something actively about, maybe pivot to some other thing, or figure out a way to survive this period as a lie low, tighten down the better down just make sure that they're able to go through this period and then start ramping up their operations after that. So those are interesting things that we would like to discuss. But let's go back to Pinn's points about Southeast Asia being a much more conservative market, things not being as aggressive in Southeast Asia as compared to India and China. Is that really so now? Or maybe if that is so, is this a good time now for fund managers, even from India, even from China? And we're not limiting ourselves to the actual fund managers. We are also talking about technology companies who have a lot of whose war chest has grown a lot bigger recently. Are they starting to look very aggressively at investment opportunities in Southeast Asia, and therefore possibly making the startup founders a lot more optimistic about their ability to raise funds? Is that happening right now? Maybe I can get back to Pinn to discuss this. Your point of view first, Pinn?
Yeah, so maybe I'll debug a little bit when I say relatively compared to other parts of the world, we're a little bit more risk-averse as a region. I think, we're not seeing as many entrepreneurs coming out to do things as, you would have. It is uncertain, right? We are living in a time of uncertainty. And then coupled with that, I think we also don't have as much opportunity to, build relationships, form teams as organically. And if you just think about the limitation in even just the sheer talent in the workforce, I think this environment is really not a good one for founders to build teams and build things, right? And I think going back to, but I do think that people are very, at least fund managers, I can really agree with both Jeff and Kenneth, right? Like we are at, we at least have now arrived at a point where there's certainty that this is the new norm, right? I think 6 months ago, I think all of us were like, let's stop and wait. It might blow over really soon. And then, because what happened in COVID environment, like kind of affect our stance as well, right? From, how fast learning online adoption will take place, how fast e-commerce will take place. I think, and after 6 months of, deep COVID, impact, I think we are all as an industry more certain that this is the new norm, right? So then we are now able to take a very aggressive stance, or whatever our firm decide to do. I think we're at least certain, there's certainty what the next 2 years is going to look like, which is this current new norm, right? Yeah.
Great. And kind of gives us a good point to launch into a discussion, especially with Jeff, considering that Jeff knows the Chinese market very well. Now, what we want to know is, Jeff, for Vickers Ventures and also some of the other potential investors from China, including the big guys and technology guys like Ambar, Tencent, and JD.com. I mean, they have made some investments in Indonesian entities in the last couple of years. But what else could they potentially be looking at? What else could be exciting to investors in general? In your case, investors from China who may be looking at Southeast Asia.
I think if we talk about Southeast Asia as a market, right? Southeast Asia really has attracted the attention of Chinese investors for various reasons. I think the market in China is very competitive, and there was a lot of learning with the mobile internet. And it seems like from a demographics viewpoint and from a historical viewpoint where PC penetration in Southeast Asia is relatively low, that those things would pan out in a very similar fashion. And so the opportunity was to take that, we've got some foresight from previous experience. Let's look at the Southeast Asian market and look for equivalents to invest in there. And so in the last 5 years or so, you've seen VC funds such as ourselves, such as GGV, such as Granite Global, such as Lightspeed as well, say, hey, let's pay more attention to this Southeast Asian market because there is money to be made. You have seen the corporates, like, we sold a company to Baidu, we sold a company to Ant Financial, just went public. Sorry, Ant, not the company that they bought. And we sold a company to ByteDance a couple of years ago as well. So they've been very, very aggressive trying to tackle the Southeast Asian markets as well. And it's simply, I think, because that it was relatively virgin territory, and that it was a huge market for them, 500 million people, that it was a chunk that they could go after. Now, I think I agree with Pinn that from I wouldn't call it conservatism, but more we seem to be the developments happening in Southeast Asia seem less aggressive, particularly in this post-COVID era. I think part of the reason is that the exits have not necessarily proven themselves. 2-3 years ago, we had a few IPOs and notable trade sales, and then it sort of stopped for a while. So that hasn't entirely panned out. And what's fueling this massive investments recently is that the U.S. stock market, the IPO markets, the SPAC IPOs and the SPAC mergers, as well as the Chinese star market, have all fueled the imaginations of exit possibilities, and therefore fueled the investments into companies that could be positioned for for IPO in the next 2 to 3 years. And that imagination is a little bit lacking in Southeast Asia as well.
Right, right. So I'm gathering from what you just said in terms of what Chinese investors could possibly be looking at in Southeast Asia would be to see what had worked in China and to try to see whether they could replicate it in Southeast Asia. And if there are existing players, maybe that's where their money could go to, because it would then allow them to bring their business model, what had worked in China, and apply it to Southeast Asia, benefiting from the fact that someone had already done something there and they kind of hit the ground running and then becomes part of the portfolio. Am I right?
Yeah. So part of the terminology that people are beginning to use around that, whereas the boom, the Chinese type boom came about primarily from a copy to China model. Mm-hmm. These were adapting business model out of the US primarily into China. But the current wave that we are seeing, not just in Southeast Asia, you're seeing a little bit of it going into Europe and back to the US as well, which is a copy from China model, right? So the likes of TikTok making such a big presence in the US is an example of that.
Right, right. And foreseeably and financial with, as you said, their recent IPO. Yeah. And I guess the US still, it's fresh territory, fresh terrain for something like that. But definitely ANZ is making moves in Southeast Asia to plug the various pieces of its portfolio to allow it to do what he has done successfully in China, to do it in Southeast Asia too. And that brings us, segues us to Kenneth, because that's your territory. The investments that you make, the investments that you could foreseeably make, could be those that could position you nicely, or at least the portfolio companies, the companies in your portfolio nicely for someone like Jeff, right? Making those investments in Indonesia, in Malaysia, in Southeast Asia, Vietnam, so that someone like Jeff will come around and start knocking on your door.
Yes.
Yeah.
Yeah. Correct.
So what could be exciting right now for you, MDI Ventures, Kenneth?
I mean, for us, I wouldn't say we're full on CVC. We call ourselves hybrids. So we actually, one of the utmost importance for us at MDI is actually to look for new business models that can benefit to the group, right? And for us, along the way, we've tackled this issue, which actually how startups can work with corporates, with the incumbent, right? So that is how we actually look at our investments. We started looking for companies that can actually leverage our network, how it can actually increase the efficiency on our operations. And to be honest, I think that in the past, 4 years, since actually 5 years since we operate, we've actually now worked with other state-owned companies to actually help them increase kind of like the operation efficiencies of this. And on the other side of things, we actually have our own consumers, right? Telkomsel alone is already 170 million active users. And we are trying to look for ways for startups to be able to leverage on this kind of network that we have. Right. It's not easy to kind of like, integrate between startups and also corporate working cultures, right? So, for us, copy from China model or copy from US model. For us, it's actually quite different here. We need some certain level of localization, because I think the behavior is not, it's not the same. I think in India, people are saying like, oh, Indonesia and India are pretty much similar, but still, we feel that there's still a certain level of difference. And I think that's 250 million people, that is different to like, the rest of the Southeast Asia or even India and China, right? So I think for us, the sectors that we mentioned become our focus this year, because we feel that, e-commerce definitely will get a boost because of this. Healthcare, like people are, now people realize they need to pay attention to their health. And education, obviously one of the key things is actually in Indonesia, we don't really have as much engineers available in the countries compared to like the rest of the region. So I think that's one thing that might hinder our growth. So we feel that online education actually helps to spur education in that sectors, right? So those three, I think, should be one of the the sectors that we focus moving on. Yeah.
E-commerce, healthcare, and education.
Yeah.
Three sectors benefiting especially from the current situation. Yeah. Now let's go back to the point that you brought up about valuation. Kind of we touch on that a little bit. Let's talk about that. Now, are we right to assume that founders are more realistic in terms of the kinds of valuation that they hope to get for their startups? Or is that the case that those founders in companies which are in those three sectors that you mentioned, healthcare, education, and e-commerce, can they, because of the importance of these three of these sectors, can they now are they expecting higher valuations for their own ventures, whereas at the expense of the others? What's going on there? Maybe let's go to Pinn for your points of view there.
Yeah, I mean, I think I think in general, I think valuations are justified, right? I think there are sectors that are raising a lot of money, but it's not for the lack of growth, right? Like they have growth, they have strong COVID tailwind, and I think it's important for founders to go into to the next 2 years very well capitalized. So for us, we're focused on working with the best team. We've made investments that raises a lot of eyebrow in the early days, and we're not afraid to, we don't let valuations get into our way too much, at least when we find a convincing investment and team.
Okay. What about Jeff or Kenneth? You want to add on to what Pinn has just said in terms of valuation?
Yeah, I think maybe if we head back to the genesis of that point, which is, our deals being done in this post-COVID era, and Kenneth had mentioned that they have a record year that they've been investing in. Question whether or not is valuation perspective, but I think that broader point is rather interesting because, certainly from our perspective, we've not deployed any capital into new relationships, into new startups since COVID. And it's really been a topic of interest and for me and we'll be happy to have a chat with Kenneth about this offline as well. But I find that a lot of people have been in our situation, and I think that's very relevant for founders listening in today or watching today, because really understanding the VCs that you're talking to, are they prepared to deploy capital at this point in time or not? Now, several reasons why we have not done so. The first of which is because in our view, we owe a fiduciary duty to our investors and to our existing portfolio companies to make sure that they've got enough of a runway to weather this period through. And so we, in a way, have re-emphasized our resources to ensuring that viable companies don't run out of cash just because the market's changed. And the other one is really that embedded into our investment process is actually meeting with the teams, and being a global fund and international travel being very, very difficult. That becomes very, very hard to do. Now, I suspect that very domestic oriented funds and investors, Chinese pure play funds that at least have all their investment companies here in China, would be able to do a deal in China because domestic travel is available. But once they need to do an offshore deal that involves flying in to kick the tires and to do face-to-face due diligence, that becomes a lot more challenging. So I think international deals are a lot harder to do than before, and certainly for entrepreneurs trying to fundraise, understanding that dynamic, I think, is very, very important.
Right. That's very interesting, Jeff. Kenneth, maybe you can enlighten us as to why and how is it that you're making more investments now, whereas Jeff's own experience is that not much is
I mean, to be honest, I think not a lot of startups expect COVID, right? I think this changes a lot of situation with these guys, and some of them, they are raising money to make sure they have the enough runway to survive COVID. Some of them actually just about to actually fundraise, but COVID happens.
Right.
So a lot of inbound deals actually are coming to us, and we see, I think people are, very skeptic when COVID happens that it's not going to recover very soon. So, for us, we see that valuations definitely have, gone down. A lot of these companies that approach us last year, for example, are agreeing to a lower valuation. And for us, it's not because I think, because of COVID, but I realized that, this year it's not going to be a great year for some of these startups, right? So obviously they have to accept this level of valuations. And for us, another thing is that we start to open up. Actually, we haven't looked at healthcare and healthcare, education, logistics. So these new sectors that are now, become a focus for us, means that we are now investing in those new sectors that we haven't invested before. And I agree with Jeff, we have to take care of our portfolio that are already in our portfolio. And for us, the good thing is that a lot of them can work with our company, our own network. So a lot of them, we don't only give them capital, but also some business opportunities either with us or government-related sectors. So that's, I think, some of the ways that the startups are able to survive, at least in Indonesia, and the ones that are in our portfolio.
Great. Well, we've actually reached a point where we need to wrap up our discussion. I would definitely like to be able to extend discussion at some point. But otherwise, maybe as a form of wrap up, maybe you can hear from each one of you. What do you think the founders, the startup founders, should be looking at, should be focusing on right now? Is it cash flow? Is it surviving through the period? Or should they be looking at pivoting towards certain sectors of the economy? And taking note also that Southeast Asia is a diverse market. There are 11 countries, 11 distinct markets there, different cultures, different states of readiness and all that. So, but you're all free to bring up points in terms of maybe words of advice to the startup. Maybe we'll start with Jeff. You can comment, Jeff?
Sure. I think first and foremost, the age-old saying that cash is king, and I think that's very, very important that companies think through as to. I mean, it is a challenging fundraising environment, and if they are fundraising, I wish everyone the best. But they need to think through as to how they're going to get through this, right? One of my fellow investors in a company said, survival is key, and if you survive, you win, because your competitors may die along the way, right? So don't think about growing your market too aggressively as you were before. Think about how long you can make the existing cash last, and think about creative ways as to how you might be able to fundraise. The second thing, and actually I'm surprised that this fact is not more widely known, but you take a company like Alibaba. In the early days of Alibaba, they were a B2B e-commerce company. They had nothing to do with B2C. They had nothing to do with C2C e-commerce. Taobao, which was their C2C initiative, was not the first in the market in China, and it was conceived during the SARS period. And so they saw an opportunity to go to the consumers, and they did during the SARS period, and that is a result directly impacting where they are today. It wasn't their B2B business that took off. Alibaba is where they are today because of Taobao and later on Alipay. So think about what opportunities there are that companies could leverage within their ecosystems that's relevant to them.
Right. Great words of advice, especially from experience in what you observe in China. Pinn, would you care to share some wisdom for our founders?
actually, second a lot of what Jeff said. But maybe just one thing or that I'll add here is, maybe two things. One is actually always try to think about what is I guess maybe the better way to say this is, don't forget about the non-urgent but very important things, right, to do, right? Because it's very easy to get swayed by COVID, try to extend runway, but forget that there's always this chart of this quadrant of non-urgent but very important things to do. So then find time to do that, because that bucket of things will be a competitive advantage going out of COVID, right? If you prepare for that now. So that's first. And then the second thing is around talent, right? So I feel like this is a good time to make sure that your best talent stay with you and not leave, because again, when the wind changes, you want to make sure your talent there to execute your strategy. Yeah. So these are the 2 points I'll add.
Great. Mr. Kenneth, you have the last word.
Yeah, I think Jeff and Pinn have already mentioned a lot of very good points, but I think for us, one of the key things is relevancy, right? Your business will be relevant post-COVID, right? I think a lot of startups, and in Indonesia, I think you mentioned about pivoting, right? I see a lot of startups actually starting to take a look at a different business model than the ones that they're doing. I see a company called Travelio who are in property segment now actually starting to do grocery deliveries. That might be an extreme case, but I think you should focus on the type of company. Are you still relevant after this pandemic? Because at the end of the day, we're here. Startups are here to solve problems, right? If the problem is not there and it's not there anymore, your solutions doesn't really mean anything, right? And the next thing is obviously the business model, right? Can you charge for that solutions? I think that's still important. So I think these 2 points should be a focus on every startup founders, especially post-pandemic, right? So yeah, that's
those are great words indeed. And then what a way to end our discussion here. First, be sure that there is indeed a problem that you're trying to address. And in trying to address those problems, make sure that you have a revenue model which works for you too, right? And of course, as what Jeff said, right now is the time to batten down the hatches. Make sure that you have enough cash to go through this period. I mean, it's going to be a new normal, but things will pick up again. And we hope that all our founders, all those who are listening in right now, will be there to join us for the ride. And as what Pinn says, what did Pinn say? I'm sorry, I forgot that.
Build on, think about what is the important but not urgent things, and build on the competitive advantage. Yeah.
Focus on the important things, things that matter to help you tide through this period. By the way, I'm sorry, I forgot to introduce myself. I myself am part of a venture capital firm, Sistema Asia Capital. I'm also here to fund startups in the growth and mid-stage of their life cycles. So I would say about Series A plus, Series B. So each one of us, 4 of us, are all fund managers. So for all the startups founders who are listening in, you know where our focus is, in terms of geographies and in terms of the kinds of sectors that we are interested in. We are here. We have funds to deploy. So look us up. Each one of us has our unique names. It's easy for you to look us up. Get in touch with us because we are keen to speak to you. We do need deal flows to come in because that's part of the business model. Thank you so much, everyone. Thanks very much to each one of you, Pinn, Jeff, and Kenneth, for spending time with us. Appreciate it for sharing your insights. Very, very wonderful insights. Thank you. Hope to meet you someday.
Thank you.
Thank you. Thank you, guys.
Thank you.